All right, traders, good morning. Happy Thursday to you. Welcome back to the live room. Part of my screen a little bit. Got to get my backup recording ready. But hope you guys are doing well. Hope you guys are having a good day. Hope you're having a good week. And hope you're ready for the weekend. I know we have another day left. We still have Friday to come, and we have a pretty explosive Friday, with it being the first Friday of the month, being a non-farm Friday. But I always look at Thursdays as kind of being like the end of my week. They're I guess not the technical end of my work week, as the work week never ends, but they tend to be the end of my trading week. And especially with tomorrow's markets, I don't really plan on having too much exposure to the markets at all. But, and again, let me get my recording set up here. We do have a few things coming out today. Again, yesterday we had the precursor, the newly formed, right? The newly formed precursor to our non-farms with our ADP number. Today we got a few things coming out. We got Challenger Jobs that's coming out right now. And a little bit later we have unemployment at 8:30. It's a normal Thursday thing. And then we have ISM manufacturing at 10 a.m. So 3 more news events that the market will be paying attention to. But of course, the main thing is tomorrow. And typically what you see happen in the market is you kind of see a pause before a major news event occurs. So whether it's a interest rate hike or a GDP number or a non-farm payroll, no one really wants to kind of make any new moves before the announcement comes out. So you see a little bit of a stall in the market. And that's what we're seeing today. So I didn't have a lot on the radar today. I got one thing to look at for our trade of the day, and then we'll work our way through, look at the lower time frame, see if you guys have any ideas. We may see some commodities going wild. I know China has just had some, I think, issues, some type of, I don't know if it's a lockdown or whatnot, but we may see some commodities falling because of that. But let's start off on the Euro Aussie. And the Euro Aussie, right? We've come to let's start with what we've recently done, right? So we have recently broken and closed to the downside here, right? You can see that line, which I'm going to delete, but I'll draw back on. That line right here was a break and close below. Now, when we usually see that break and close below, we assume that we are predicting price action to continue lower. But what happened directly after that bar, and what does it mean? Yep, so right after that bar formed, it was engulfed the very next day, the very next candle. I look at that as being a false breakout, which eliminates the lower low, lower close. So since then, right, we've had bullish movement for the last few days, and we've traveled all the way up to test our most recent structure high right here, where we are currently holding. Now we go down to the 4-hour time frame, right? You can see structure, look left, structure leaves clues, nice little rejection area right here. Price has rallied up into that level, right? We've done a little AB equals CD as well. Boom. Swing low to swing high, and we retrace from that. Boom. Swing low to swing high in the same area. We can add on a Fibonacci extension as well. See if we have any Fibonacci influence. Swing low to swing high from that A to B. And back down. Not a lot of confluence there. You're going to get a 127 net structure, but it's not going to line up with that AB equals CD. But you can see a nice little confluence area here at previous structure. You see a nice little rejection off of that. Price pushed up, tried to spike past it, and then boom, we were not able to break and close above. We then put in a bearish candle. Now, a pin bar, right? So you can see that it eventually ended towards the open, but we did push down. And now we're kind of deciding what to do right now. So we go down one more time frame lower. And if you're looking for a counter trend trading opportunity, I would keep an eye out for a double top. I would keep an eye out for a retest of structure. I would keep an eye out for price action coming back up to retest this level. Obviously, we want to get a hold, right? We have to retest our highest close. We cannot close above our highest high. And that's going to offer you an opportunity, excuse me, to look for a short. Now, is there anything else that stands out for you guys here? What else are you seeing on your chart? Because we want to think about potential targets. There's a few levels. One would be the base, right here, that same V point that we tested before, right? That's going to be right near this little ice zone, right? These things aren't going to be perfect, but right in here. But what else do you guys see? And again, it's going to be a short and sweet trade of the day today because there's not too much happening out here. We had a long session yesterday, 30-minute session. We had a really good question if you guys didn't see it about full-time trading. All right, I'm going to load up my Ninja Trader charts real quick because this just makes life easier for me. Same chart. Let's go down to a 60-minute chart here. But we can see it just as clear on the 40, right? If I use my Enigma pattern recognition, exactly, Daniel, let's put it on and see if it grabs it. Boom. Potential bear, or excuse me, bull. I'm thinking bearish because the double top is bearish. Potential bull cipher. So again, this is one of those situations where you can combine two different aspects of analysis. You could be looking for the structure-based double top as a chance to trade. When you're looking at extended targets, right, you can say, hey, you know what? This happens to be the C leg of a cipher pattern. Maybe with my extended targets, I ride this down to the cipher completion or right beforehand, right? We got this 145 even handled number right here. We also have the B leg of the cipher structure right ahead about 145.17. I would actually bump up targets to that instead of going below structure, but you know me and structure, it's very important. But I think that's a good idea for either aggressive first targets or to put for second targets. Now, the one warning I would have about this potential structure-based trade is this, and you can see it here on the Ninja charts because we have the VS1s up. What do you guys notice about this structure level? I'm going to erase the pattern stuff here. What do you guys notice about this structure level? Anything that may be a warning sign. No, it doesn't. It never stops. There it goes. It finally stopped. We have multiple overlapping levels of structure. Now you can see the different boxes on there. Those are the VS1 levels, right? Tells you that there are important levels of structure looking left. We have these overlapping levels of structure. And what makes it hard about overlapping levels of structure, or what overlapping levels of structure makes it hard when you're trading to do, is find a solid place to put stops. Because you'll typically see price action, it's not out of the realm, right, for price action to spike past the current level of structure and probe the next level of structure before reversing. So if you have a target or a stop, excuse me, not a lot of sleep last night, so forgive me. If you have a stop loss right here, because it avoids this first level of structure, well, it's not necessarily in as safe as a place as you may think because we have that other level of structure there. Now, sometimes there's nothing you can do about it. Sometimes you just have to accept that. You can't avoid all of these, right? It would be a bad idea to look for a double top here and put your stop up here, right? Would you guys agree? Now, lo and behold, traders do it. We talk about one of the biggest mistakes that traders make is moving stops back. I've seen this time and time again, unfortunately, where traders will just keep bumping that stop up, where the stop loss will be here. Price starts to go a little bit against them, and they'll be like, you know what? I'm just going to get above the next level of structure. You know what? I'm just going to get above the next level of structure. You know what? I'm just going to get the next level of structure. Before you know it, you're all the way up here. And now you've got a risk reward that looks like, that started off looking like this, and now all of a sudden looks like that. So you don't want to do that. So the two choices are this. Either you accept that your stop loss is not going to be in the greatest position. It can still be in a good position, just not the greatest position. Or what's the other option? Accept that your stop loss is in the greatest position and you just eat that. Or what's the second option? It's going to be simpler than you think. Yeah. don't take the trade, right? If you can't put your stop loss, right? So a stop loss isn't put on a chart just to have it on there, right? You don't just put again, so many conversations with traders over years, and this is why I want to write this book, the 50, I don't want to call it the dumbest questions I've heard, but the 50 most interesting questions I've heard in trading, right? But I've had so many conversations in the past with traders so they start off by not wanting to use a stop loss. And then we have a conversation and we talk about the importance of a stop loss and how, like, hey, if you're going, you jump out of a plane and you got a parachute, it's always good to have a backup parachute. Yeah, you plan on that parachute, never using that backup parachute, but you never know when you may need it. And for that one time when you do need it, it's going to help you, right? And you're like, okay, I'll put a stop loss on. And then they feel like it's enough just to put a stop loss on. Like, it doesn't matter where that stop loss is. They just feel content because, hey, Keel, look, there's a stop loss on my chart, so I'm good, right? I'm like, no, that doesn't mean you're good. Like, your stop loss has to have a purpose. Like, a random stop loss is pointless. It's better than not having a stop loss at all, I guess, but it's pointless. So you have to have a reason for your stop loss. So if you're someone that has a stop loss or looks at the situation and says, hey, there's no stop loss I'm comfortable with, like, unless I'm above all the highs, then it's just not a trading opportunity you can take. And there will be more, right? This isn't the last trading opportunity ever in the world. There will be more. And your job is simple. You just have to wait until the next trading opportunity comes, right? So it happens. So either be comfortable with it. Hey, it's in a good position, but not the greatest position. Or I'll just wait for the next opportunity. Daniel says, what if you were a breakout trader and a pattern trader? In this setup, you get both confirmation to buy the pattern and sell the breakout of the D leg. What should you do? So you're trading breakouts of what? Breakouts of, like, right here. So if price action were to come to structure and break out, you're looking to trade it from here to here, like that type of deal. Yep. Well, this is where you would have to choose. So the first thing, when you're developing your trading strategy, ideally you want your trading strategy to center around whatever I don't want to say your best, but your number one trading strategy is, right? So when we teach people how to trade, it's always, do we say start with 20 strategies at once, or do we say start with one? We say start with one, right? Choose one strategy, master one strategy, do it on a handful of pairs, get good at that one strategy. And then once you're good at it and it's basically printing you money on autopilot, then you can go about adding strategies that complement it, right? So you have your main thing and then everything else complements it. So when you're creating, developing, choosing these strategies that are going to complement your main strategy, right? When you're creating those rules, you want to make sure there are no conflicts. Now, I know what Orsi's going to say as well. This is another option I always forget to say, but you can always have two accounts, right? If you absolutely don't want to sacrifice any of the rules or any of the integrity of anything, just have two separate accounts. Have a different account for each strategy. You have your breakout account. You have your pattern account. You only take breakouts in your breakout account. You only take patterns in your pattern account. You can do that as well. But if you were to trade everything in the same account, you just have to, when you're developing those strategies or choosing those strategies, you have to put in rules for what you can and can't do. And that either means deciding to trade or not trade a strategy because it conflicts with another one, or finding a way to make it work. So, and a lot of it will depend on what you value over the other. So, for example, in a situation like this where we have our cipher, I'm going to put our cipher back on for you. Again, we're looking at X to A to B, B to nope. Sorry about that. Let's just do it simply here. Boom, boom, right? You can say, hey, you know what? If breakout occurs on the C to D leg of a potential pattern formation, then let's say you value the pattern more, then I do not take the trade. right? So in a situation like that, you would just have to pass up on your breakout trade. Or you can say, if I'm in a breakout trade, then I pass on the pattern. So you're going to have to choose one or the other. Again, if you're trading them in the same account. Does that make sense? Oh, sorry about that. Had it on mute. I was saying, welcome to the people over on Tradingview. I got a question that says, can you look at gold for today? I said, I apologize, but we already did our one trade for today. We're currently talking about it. So sorry, that's all we do on the live stream. If you want to hop in for the full thing, you can do so. Just head over to our website and you can take up a trial membership and hop in the London room and hop in the New York room. And you can look at gold twice. But yeah, you're gonna have to choose one or the other, Daniel. If you're gonna trade both, right, you're gonna have to choose one or the other. You're gonna have to say, hey, this trumps this, or that trumps that. And then at some point, you're going to be upset because one's going to work out and the other one's not going to work out. And then the other one's going to work out and the other one's not going to work out. So there's always going to be that. And you're just going to have to deal with it. That's just going to have to be, that's what comes with the territory of trading two different strategies where you could potentially have overlapping signals. Now, in some cases, they may be different, right? Because if you're looking at, trading the breakout of bat patterns or Gartley patterns, right? There may be situations there where you can take both, right? The Cypher has a very shallow decompletion at the 786. Some Gartleys do as well. A bat pattern is down at the 886. Maybe that offers more room. So maybe in those situations, you can trade both, and maybe you just have to either adjust your targets for the breakout or do something else. But that is the part of strategy development. If you're going to be trading multiple strategies, ideally, they should complement each other and not interfere with each other. But sometimes they will. And when that's the case, you just have to have a protocol for how do you handle those situations. What trumps what? When do you know when to take what action? When do you know when to take the other action? And that way you can stay consistent with it. Said, makes sense, perfect. Just said, yep, it's all about creating rules. Yep. And sticking to the rules. So, good question. All right, live streamers, again, short and sweet today. We had a long session yesterday. It wasn't on Tradingview, so if you're on Tradingview, just watch it on the YouTube channel. But short one today. Hit that like button on your way out. I will see you guys maybe this weekend for a Trading Edge video, probably, and next week for more live streams. If you're watching on Tradingview, I've been bouncing back between doing them on Tradingview and not doing them on Tradingview. Sometimes the connection is not too great. So I kind of test it out in the morning and see what it is. So we run these things at 7:30, Tuesday, Wednesday, and Thursday. If you're not seeing it on Tradingview, just head to the YouTube channel. It's always going to be there. But Tradingview is sometimes hit or miss with the streaming. But it worked well today. So, all right. See you guys.